Hi everyone, let's cover my Elliott Wave scenarios on Ethereum. Now Ethereum has been in this range for a very long time already, but now we're on the verge of breaking out. The probabilities are highest for the bulls for over 2 years already, since this high was made here in the week of the 10th of April 2023, because it touched the 0.618 Fibonacci taken from this high to this low, which basically invalidates an impulse to the downside, as you don't want wave 4 to touch the 0.618. which increased the probabilities for this to be a three-wave zigzag structure to the downside. And if you get a three-wave structure to the downside after a five-wave move up, the probabilities are immediately highest for price to take out the high and continue the trend at a later stage. It just took a very long time on Ethereum because we have been in this sideways complex structure counted as a zigzag in a wave W, double zigzag WXY in a wave X, and then a flat ABC structure in a wave Y, reaching the target area for wave Y perfectly, the 0.618 Fibonacci, and we also had some additional support over here, a target box as presented in one of my older Ethereum videos when price was moving to the downside here, and we were looking for price to respect these areas and move to the upside from our target, and it has done so with over 200%, which is incredible. Now then we get to the move to the upside, so we get to the daily time frame. And on the daily time frame, this at the moment is, I guess, my preferred count, where I see a 3 finish a little bit higher, preferably touching 4.5, then get a retracement in a 4 and another push to the upside in a wave 5. So what you're looking at here is an impulse in a wave 1, 2, 3, 4, and a wave 5. Now inside wave 3, we then have 1, 2, right, 3, 4, and then look for wave 5. And inside wave 5, 1, 2, 3, 4, 5. The 1.618 Fibonacci that you see on my chart, on a linear chart, is taken from the start to the end of 1 to the end of wave 2, which generally is a minimum target for an extended wave 3. And an extended wave 3 is the most common impulse. So preferably price would touch 4.5k here, touch the 1.618, and then afterwards starts ranging sideways in a wave 4. And then the wave 4 of a lower degree, which is the price action here between 3.9k and 3.3k, is an important target for your higher degree wave 4. Now after this wave 4, we then look for a push to the upside in a wave 5 and take out the all-time high. Now another one that I do see quite often, also mainly in our Discord channel, right? Like we have a channel, Ethereum, where we specifically talk about ETH, is this one here. So we have 1, 2, 3, 4, 5, right? So we have a zigzag structure in a wave 2, flat structure in a wave 4, which is common. A flat is a sideways structure. This is a sharp structure. And it is common to have a sharp structure in a 2 and a sideways structure in a wave 4. The only, I guess, quote unquote, issue I have a little bit with this count is that wave 3 is quite short, right? So it did not reach the 1.618, for example, which generally is a common or minimum target you like to see for wave 3. But the rules state that wave 3, quite simply, is not allowed to be the shortest wave. So as long as wave 3 is either longer than 1 or longer than 5, it is okay. But preferably wave 3 extends to at least a 1.618, which then of course happens in the scenario that I have here preferably. Also, inside wave 3, I feel like on the lower time frames, because I have had a look here on the 1 hour and the 4 hour internally, I feel like I miss a wave 4 and a wave 5. I feel like I miss a 1, a 2 here, and then a 3, and then a 4 and a 5 to end wave 3 at this particular high, which is the reason why in, I suppose, my main scenario here, I label this the 4 matching this wave 2. It works from a price perspective, it works from a time perspective, right? So it works pretty nicely. And also here, price moving up, another high, which is then going to be wave 5 of wave 3, right? Highest volume is in your wave 3 over here, which is what you like to see. And then you make another high on a lower amount of volume. That works in this scenario. Of course, it also works over here, 3 and 5. But I feel like I kind of like miss a wave 4 and 5. Now the price action, however, between the two scenarios can be incredibly similar. You can see the polylines overlapping here. If I put both of the scenarios on my chart, you would then look for a retracement and continuation. Preferably this range holds. And then you look for price to move up However, it's what happens after that is going to be a big difference, but it makes no sense to talk about it because we're talking about many days, many weeks before we eventually have to consider what happens when a wave 5 finishes or when you continue to the upside after a 1, 2, and a big wave 3 to much, much higher prices, right? So these are the two scenarios I keep an eye on. Both are bullish scenarios in the end. In both cases, you're looking for the all-time high. I was thinking, am I going to put a scenario on my chart that is a 1, 2, 1, 2, and you look for another 1, 2, 3 continuation, but I don't want to cover this in detail because it just doesn't have the highest probabilities, because your wave 2s over here are not overlapping, which is most common, 1, 2, 1, 2, 1, 2, and then a wave 3. It tends to look a little bit like a diagonal structure, and that's definitely not the case. We don't have overlap between this retracement and this range over here. Right, so I missed this. And if I take a trend-based fib from the start to the end of the first move to the low over here and toggle on the 1-to-1, then on a linear chart, you can see that this move up is longer and preferably a lower degree wave 1 is a little bit shorter. But I mean, it's not an invalidation. The main thing is we don't really have overlap between the two, which is what I like to see. But all scenarios are pointing for higher. Here we would look for a retracement and then higher in a 5. Here, look for a retracement continuation to new all-time highs, probably in a 3. And in a multi-1-2, you quite simply also preferably get a small retracement, right? 1, 2, 3, 4, 5, small retracement, and then you continue towards the upside. And then I like to show you, well, let's actually first start with my levels before I start talking about KRZ. So here we have all the levels that I have on ETH at the moment. Feel free to copy them if you like. They are very, very nicely respected, right? So here we have everything that is going on. I'm not sure if I think I have to remove the weekly, but I'm not sure. Anyway, these are the levels on my chart. Let me check the weekly here. Yeah. Okay, that one has to be removed just to make sure you have a perfect chart. So price found support here on a nice order block on the 8-hour chart, moved towards the upside, currently at resistance, the range point of control. And we then finally talk about KRZ. KRZ is a method that I have invented myself many years ago because I had some losses on Bitcoin, which then brought to my attention these very special fibs. Now, what you see here on my chart, I don't really want to cover this in detail in this video. It would make it too long, but basically, this fib is pulled from the low over here to this high. You want this pocket, the 1.236 to the 1.38 to be respected. And then we look for price to break out on the other side. And the moment it does, all of these fibs here are going to be important targets. The minus 0.236, 0.38, and then etc. Right? Now the first area to the upside is just below the all-time high, between 4.5 and 4.9K, which can work very, very nicely when we compare it with our scenarios, right? If we look to end a wave 3 and wave 3 here, touch the 1.618, look for a 4, right? And then continuation up in a 5. Same here, end your wave 5 in this area, get a retracement continuation. It's just an area to be aware of, as it can definitely act as resistance, as it has done on Bitcoin many, many, many times as well. And then I have another pool over here, which I suppose is more local. Let me go to the weekly. So this one here is taken from this low to this high. The pocket is respected and price is breaking out. We shortly wicked here in the 0.236, right? Bit of a retracement, as you can see, but then we moved to the next area. Nicely respected, nice retracement. And currently, we're in the middle of two zones, and the next area is 4.6. And if I open the white area that I just had over here from the big log on the monthly, right? So this is the other KRZ. So let me remove this, turn this one on, and this one is on linear chart, right? You can see the white box, okay? And this white box, if I close the rest, is overlapping with the target of this KRZ over here, right? So this area is important resistance on Ethereum, okay? So if we then talk about probabilities, I guess it's very clear, right? The probabilities are highest for ETH to take out the all-time high. All scenarios are pretty much pointing to that all-time high. Sure, there's a few differences with the scenarios here that we have going on locally. I would like to see this one over here get another 4, another 5. but the price action with this scenario should be relatively similar. And even if you're looking for 1, 2, 1, 2, 1, 2, where the final one is 1, 2, 3, 4, 5, get a retracement, continuation, invalidation is the low. The price action is relatively similar, right? But I would personally like to see this one as the primary and the other twos as alternative. The direction is the same, which makes it easy from a trading point of view. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.